and welcome back to this video on Business and Entrepreneurship Education Grade 9. In this video, you will learn about Unit 13, which is on income statement. The second lesson for this unit is about the profit and loss account. The learning objectives for this lesson. At the end of this unit, you will be able to first, distinguish items of trading account and profit and loss account. Second, draw the format of an income statement, and prepare an income statement. As stated in the first video, the income statement is divided into two parts, namely the trading account and the profit and loss account. Let's look at the trading account in more detail. The trading account records items which deal with the trading activities of an enterprise. It is prepared to find out whether the enterprise is making gross profit or gross loss. The gross profit or gross loss is calculated by deducting cost of sales from revenue. Let's now look at the profit and loss account. The profit and loss account is the second part of the income statement. It is that part of the income statement that calculates the profit for the year. The profit and loss account is that part of the income statement that calculates the net profit or net loss that an enterprise makes. It takes into consideration the income and expenses of the business. The formula to calculate the net profit or net loss is net profit or net loss is equal to gross profit or gross loss, add other income, less expenses. Let us now look at the difference between income and expenses. Do you know what an income is? Well, incomes are gains for the business. The main income of any business is the money obtained from sales. There are other incomes other than sales. They are interest received and commission received. If the business has other incomes, these should be added to the gross profit or gross loss. Moving on, let's now look at expenses. Do you know what expenses are? Well, expenses are payments made by a business for the day-to-day running of the business. Some examples of expenses are rent, wages and salaries, repairs and maintenance, utility bills, that is, electricity, water and telephone bills, fuel, and insurance. Now that we've looked at the items found in the trading account and profit and loss account, let us look at the format for the last part of an income statement, that is, on the profit and loss account. As you can see, the gross profit is 50,000 rupees. As mentioned earlier, other income must be added to the gross profit. So, as other income, there are commission received and interest received. These amount to 2,000 rupees and 500 rupees respectively, giving a total of 2,500 rupees. This is added to the 50,000 rupees gross profit, making it a total of 52,500 rupees in the third column. After that, the business needs to deduct expenses. In this example, as expenses, the business has rent and insurance of 8,000 rupees, salaries 10,000 rupees, fuel 5,000 rupees, and electricity and water 2,000 rupees. Adding all these expenses will give a total of 25,000 rupees. This figure is put into brackets as it should be deducted. Therefore, the net profit for the year is 52,500 rupees minus 25,000 rupees. This brings us to a net profit for the year of 27,500 rupees. Let us now take a look at a complete income statement for Bob's business for the year ending 31st January 2019. As you can see, the entrepreneur's name is written at the top, and just underneath it, we should write income statement for the year ending, followed by the year it is being prepared for. The income statement has 3 columns. The first column is to write the details, and the 2 last columns are to record the amounts. The first item in an income statement is revenue. Here, revenue is 32,000 rupees, and the amount is recorded in the last column. Then, we need to subtract the cost of sales. To calculate the cost of sales, first we need to record opening inventory of 5,800 rupees, then add purchases 10,200 rupees in the second column. This gives a total of 16,000 rupees. To obtain the cost of sales, we have to deduct closing inventory of 4,000 rupees. Again, the closing inventory and the total cost of sales figures need to be put into brackets as they must be deducted. This gives a gross profit of 20,000 rupees. Remember, after the gross profit, we have to add other incomes. In this case, there is interest received of 200 rupees. This gives a total of 20,200 rupees in the third column. Moving on to the second part of the income statement, that is the profit and loss account, we have to less expenses. As expenses, the business has rent of 2,000 rupees, wages and salaries 10,000 rupees, water, electricity and telephone bills 4,000 rupees, repair and maintenance 500 rupees, and insurance 1,000 rupees. These figures are recorded in the second column, and the total of 17,500 rupees is recorded in the third column. Therefore, the company has made a net profit for the year of 2,700 rupees. This is calculated by deducting 17,500 rupees from 20,200 rupees. From the above income statement, it can be seen that Bob has earned 2,700 rupees as net profit for the year. Remember, not all items from the trial balance enters in the income statement. It is to be noted that assets, liabilities, capital, and drawings are not included in income statement. Here are some additional links that you may use to gain more understanding on the topic. Well, students, we've now reached the end of today's lesson. Until next time, goodbye.